Bitcoin just dropped below $70,000 and a lot of people are panicking right now. But here's a very controversial take. This crash may not have been only normal but maybe necessary. In this video, I'm going to show you using charts and real data why this pullback might actually be healthy for Bitcoin, why it resets the market, and how long-term investors can benefit from this type of behavior from Bitcoin. Let's talk about the bigger picture here. Markets that go straight up don't build strong foundations. Healthy markets move in waves. First the market goes up, then there's a pullback, then there's a consolidation, and then there is a new uptrend. This has happened countless times during the previous bull runs. You need to understand that markets won't move in straight lines in any direction. Every major Bitcoin cycle had painful corrections, and what those corrections did was, first, they cleared out leverage from the market, they took out weak hands, created a better entry price for long-term investors. So instead of seeing this crash as a disaster, why don't we try and change the narrative here? You should ask yourself this: how did this crash actually improve Bitcoin's structure? Now let's take a look at the Bitcoin chart to understand what exactly is happening in the market right now. First, Bitcoin is currently sitting at $68,000 right now. We saw a very huge week to the $60,000 mark for Bitcoin. And currently at the $68,000 mark, Bitcoin is using the previous bull run's all-time high as a support line. This level right here of $60,000 and $70,000 is a very important zone for Bitcoin right now. To give you a very high level overview of what was happening in the market, first, we saw the price of Bitcoin stretched too much because of institutions jumping in, BTC ETF, and some hype as well. This saw a very weak climb towards Bitcoin all-time high of $125,000. But what this did was, it elevated the funding rates a bit too much. There was too much leverage in the market, and the market definitely looked crowded when BTC was trading above $120,000. Now, the recent Bitcoin crash from $95,000 to $65,000 did three very constructive things for Bitcoin. The first thing is that it reset the overextended price for BTC. Second, it flushed out excessive leverage in the market. And from the looks of it, the third thing that this crash did was that it created real price discovery again for Bitcoin. I have been in the crypto market for over 5 years now, and I know that when you draw your favorite imaginary support and resistance line on Bitcoin, and I know that when BTC breaks your favorite imaginary support and resistance lines, it definitely hurts emotionally, but structurally you need to know that it can make the next rally up much more cleaner and sustainable. This is the only thing that I have said to myself over and over again when BTC crashed 10%, 20%, and thinking in this way has saved me from losing a lot of money and allowed me to hold not just Bitcoin but different altcoins as well through rough periods. And mind you, I have been greatly rewarded for doing this one thing. Now we all know how all of these publicly listed US companies love acquiring BTC so that they can push their price of the stock higher and higher. In the early February or last week, we saw a total BTC outflow of $762 million. This added a lot of sell pressure on BTC, pushing its price further down. Yes, today it saw a huge inflow of $300 million, but you need to know that since the start of February, majority of the days only saw BTC ETF outflows. Only 2 days out of 6 days for February has seen BTC ETF inflow. Now you may think to yourself that this is a bad thing, right? Well, most people think that way, but we are here to think differently and outside of the box. So let me give you a positive interpretation for this. When weak institutional hands leave, price finds a new, more stable base. All the remaining holders tend to be more conviction driven rather than short-term traders. This allows for the market to become less dependent on short-term flows. So yes, definitely it hurts now, but all of this leads to a stronger support later. So how do you find opportunity for yourself during times like this. We have all seen previously when there is a global uncertainty happening because of, let's say, Mr. Trump or trade deals or wars, the first assets to suffer are the ones that are the most riskiest. And in our case, it's going to be crypto and all other altcoins. So when global markets turn risk off, Bitcoin usually sees a sell-off, but it also creates a better entry point for patient investors like us. Historically speaking, if you take a look at the data, some of the Bitcoin's best long-term returns started after scary pullbacks, not during euphoric highs or when BTC ETF, not when there was bullish announcement happening in the market or globally. So this crash has reduced complacency, made people rethink about risk, and separated traders from investors. So if you are a long-term holder, then this is a gift for you. This does not necessarily mean that if you are a trader, then you are at a disadvantage here. Stick around until the end of this video because I will be talking about this as well. If we speak about global economics, BTC inflows, outflows, then we need to talk about the global liquidity as well. Yes, recently we have seen that Bitcoin liquidity has been somewhat tighter as compared to other asset classes, but here is why this is actually useful. Tighter liquidity forces the market to stop pricing in perfect conditions. Instead of dreaming of endless money printing, investors become more realistic, more cautious, and more disciplined. This kind of environment is what produces lots of millionaires that are smart enough to buy the crash, essentially being euphoric when everyone else is panicking. Another angle to be aware of is that when price drops sharply exactly like this, then the only thing happening is that short-term traders are panic selling and institutions or long-term holders are accumulating BTC at this point. This tends to make the network more decentralized in ownership, and what it does is gives an equal distribution network for Bitcoin. Let me show you why this crash was much needed for the next move up. Yes, I'm personally thinking that Bitcoin will move up a bit from here. Before the drop, there was too much leverage in the market, too much confidence because of Bitcoin ETF, and there was too little caution. Now what has happened is that leverage is lower, fear is higher, and positioning is much more cleaner. All of this adds up to a much more cleaner setup for a healthier rally upwards. But what does all of this means for you as a long-term investor or let's say a trader? Well, if you are a long-term investor, you should definitely think about starting dollar cost averaging at around this area. Do not go all in. As I mentioned previously, the $65,000 mark is a very important zone for Bitcoin, so I would definitely start accumulating some BTC as soon as it goes any more below than $69,000. The zone from $65,000 to $69,000 is a very important one for Bitcoin, and I personally feel like this zone is a very good accumulation point for BTC. Again, as I mentioned, I would personally not go all in on BTC right now, because if there is a chance that BTC breaks this previous support of $65,000, then the next major support is at around $55,000. Of course, I'm not saying that BTC will go at $55,000. The chances are low but never zero in crypto. If you are a trader, then volatility is going to be your best friend. Volatility is when traders make most amounts of profits, not when market is consolidating in one single zone. So if you are a trader, I would personally take a look at the weekly chart of Bitcoin. Keep an eye on daily time frame as well. See what BTC is doing and get ready when BTC breaks its major support area of $65,000. I would definitely not go long around this period, even though BTC is seeing a huge inflow of ETF, but that could change anytime. That was all for this video. If you want to learn more about macroeconomics, Bitcoin, technical analysis, fundamental analysis, then make sure you are checking out the Telegram group chat that I have created. Link will be in the description. But anyways, if you want to learn more about Bitcoin and crypto crashes, then make sure you are checking out this video right here.